Hey everyone, welcome back to Corporate Decoder, the place where we decode those twisty corporate documents so you don't have to. Today we're diving into Pharma's latest filing. Will it be a groundbreaking report or just another snooze fest? Let's find out. Hopefully there are no weird details. This report is a post-effective amendment, basically an update to their registration statement. They're looking to resell shares of common stock. But don't worry, we will try to figure out how it all fits. So here's the deal. This filing is all about the resale of up to 820 and 911 shares of common stock. These shares come from warrants, which are like options to buy stock at a certain price. The selling stockholders or shareholders are looking to sell these shares from time to time. Now, the company won't directly get any money from these sales. However, if the warrant holders decide to actually use their warrants and buy the stock with cash, Pharma could get about $233 million. It all boils down to if people believe in the company to use warrants. The company doesn't know exactly when or how much the selling stockholders might sell, and says it will sell from time to time after the effective date of this registration statement. This part's a formality. It just means Pharma is updating its registration statement with the SEC. They're adding their latest financial information, including their year-end results for 2024, as part of their annual report. This is required to stay compliant with regulations. This is a preliminary prospectus. It means things could still change. The company is clear here that this isn't an offer to sell the stock. It is basically testing the water. They're registering these shares so that the selling stockholders can resell them legally. If the warrants are exercised for cash, the company plans to use that money for general corporate purposes, including research and development, product growth, and even international marketing. The last reported sale price of Pharma stock was 121 cents. It can help you to understand the market perception and investor confidence. Of course, they wouldn't be doing their job if they didn't remind you that investing in their stock involves risks. Pharma is a biopharmaceutical company focused on developing new ways to treat things like PTSD, anxiety, fibromyalgia, and other brain-related diseases. They're working on novel therapies using both traditional drugs and psychedelic compounds. Their main project is SPC-15, a nasal spray designed to treat PTSD and anxiety. They're also working on SP-26, a ketamine implant for fibromyalgia and chronic pain. It is a good habit to read the risk factors in these reports. Here are some of the scary things. They have a limited history, meaning it's hard to predict how they'll do in the future. They will need more money to keep going, and getting that money might dilute existing stockholders. Developing new drugs is a long and uncertain road. There is a risk clinical trials might get delayed, approvals are not guaranteed, and regulations around controlled substances, like some of the psychedelic compounds they're researching, could throw a wrench in the works. To help navigate, here's a peek at the table of contents in case you want to research more into this company. Now that you know what it's about, you can go to the 10K filing or other financial statements to view the details. Time for the moment we've all been waiting for, the numbers. This section is where management tries to explain, well, the management's discussion and analysis. Okay, so the company is making some money, but mostly from a licensing agreement. For both 2024 and 2023, revenues were about $72,000 won the Aikido license. Here's where things get interesting. The company is spending a lot of money. Look at this breakdown. Compensation is almost $1 million, professional fees and research and development. Overall operating expenses are nearly $5 million. Let's make it simple. True compensation a bit higher, up 4%, means they're paying their people more, not a red flag off through professional fees. Down 30.6%, that can be good, means they are probably set up well and spending less on legal clues, research and development. Skyrocketed 182%. This is the place they are putting their cash. The company mentions the rise in research and development due to their investigator studies with third parties, so they better get something good out of it. These costs went down mainly because they moved their incorporation from Delaware to Nevada. Savings is savings. The company had a net loss of $4.3 million, worse than last year's $37 million. Ouch! All these increased expenses really hit them hard. This is all about how much cash they have. They finished the year with $39 million in cash and $1 million in short-term investments. Digging into that, their working capital, basically their ability to pay short-term bills, decreased by about $1.4 million. This was mainly due to a decrease in short-term investments and an increase in liabilities. Basically, they have more debt obligations. Here is where money moved F2 operating activities day-to-day business. They spent $3.8 million investing activities, buying, selling assets. They actually made $973,777 financing activities, raising money. They made $3.2 million overall. Their cash increased slightly. The company believes they have enough cash to keep going for at least the next year. But again, this requires more assumptions than hard truths. It is always important to read this section. It basically allows the company to issue preferred stock without asking stockholders. Those preferred stockholders could then have other preferences over normal stockholders. Something to keep in mind. This is the section related to risks of IP, their most important asset, and it looks scary because it is. Pay special attention to it if you plan to invest. The company does rely on protecting their own IP and also getting agreements for other tech to help them do that. This section basically confirms there aren't any hidden dealings between the executives and the company, which is definitely what you want to see. Alright, that's the filing. What do I think of all this in simple words? Silo Pharma is betting big on a few key projects. Here's my take. Their financial state isn't the best right now, with those net losses. And those net losses are only a bet on drugs and regulatory approvals. However, if their clinical trials pay off and approvals are obtained, the potential could be large for this small market cap company. This is a risky play with very large upside potential. Please do your research to invest accordingly, and don't take what was said here as financial advice. That's it for today. If you found this helpful, please make sure to leave a like, comment, and subscribe for more Corporate Decoder.